Urs, excited to be back on the Swiss View today to talk about what's happening around the world. There's a lot going on. I think a good place to start. We'll make our way to the rumblings of a financial crisis that's been being talked about for 2 years, but seems to be picking up some heat. But to start, I think, we have to talk about and acknowledge kind of what's happening around the world, especially with the U.S. government still in shutdown today, talking on the 22nd of October, excuse me. But, causing some issues in terms of where are we seeing the U.S. dollar going. But, there's clearly some turmoil happening in the U.S. What else are we seeing around the world that is kind of creating some uneasy feelings?
Right. I mean, the US is not the only government that is struggling. There are other governments. First and foremost, in Europe, there is France, where the what is it called? The the prime minister. He wanted to step down, but then Emmanuel Macron, France's president, convinced him to stay. So he has to come up with another deal, with another solution, how to get the whole government together so they can make decisions. The biggest challenge there is, again, the budget. So they have to save because they are overspending for years already. And there isn't really like a solution in sight. And the problem is that there are a lot of people they paid into the retirement funds. And I read statistics where about 6 out of 10 withdraw more money than they paid in. But the elderly people, they don't want to forego any of the benefits they were promised. And so that is a very tough discussion. And then in the UK, we do also have still the challenges with the budget. They're bringing their government debt up higher and higher. So it's really a struggle there. And then lastly, a little bit more to the east from our side, there is Japan. And Japan finally got a new prime minister, the first woman in history. But she is also on the side where she doesn't care that much about government debt. And as we all know, the government debt of
Japan
in relation to its GDP is about 240%. So it's already pretty high. And I mean, seeing all these countries struggling with their finances, which has been, from our perspective, a clear consequence of the last decade or more of overspending and not worrying about anything, is just sad, but stresses more the stability that we provide here in Switzerland, not only when it comes to our finances, but also when it comes to our government.
Yeah, I think that's an absolutely perfect kind of exclamation point on kind of these turmoils of, France, long-standing, world power, I guess you could say, good economy, UK, similar situation, and Japan, strong economy, heavily their government debt heavily supported by the US dollar, obviously, but another indebted country, maybe not 240%, but approaching 140% of debt to GDP. But I think that's the reality. I mean, the US government, where it's currently in a shutdown, but when the ruling party administration, I'd say, you see a prime minister elected in Japan who's for more spending, lower interest rates. The current Trump administration is a big fan of that, right? They want the same thing.
Right.
And it doesn't stress discipline of what you see with Switzerland. I mean, we talked about this the last time we were having a conversation of, you can increase your debt and lower your interest rate so you have a little bit higher inflation to push your economic growth or your gross domestic product. But at the end, you have to balance that out of what's the actual real growth. And would you rather have real growth with less inflation, like a place like Switzerland, so the numbers don't look as flashy, growing 1%, 0.9%, but inflation is low.
Right.
And that's the real growth rate, right? It's not being inhibited so much by inflation. Or do you want those flashy numbers, 3, 4, 5% growth and 3, 4, 5% inflation, right? So your real growth is 0.5%, maybe. And for the long term, what's sustainable, right? And we've lived in decades and decades, as you mentioned, of spending from these governments, and then throw into the mix the geopolitical tensions that are happening. I mean, in the Middle East, we have the Hamas-Israel ceasefire that's very fragile, that seems to be ignited every few days, unfortunately. It's just sad regardless.
It just doesn't add the level of security which everyone was hoping for.
Yeah, absolutely. And I think what was softly, I guess, promised from a US, and I think that's the picture of this is, right, the US is involved everywhere in the world. So why do we as a Swiss podcast talk about the US? Well, we have to take into consideration the movements, right? What are the challenging, what are its effects? And that's who we're trying to speak to, Americans looking outside, and in the midst of chaos, to look at a country like Switzerland that, has people turning down a role of one of the 7 presidents multiple times, and has low debt to GDP, is in control, is surplus, has low interest rates. The stability of an economy is so much more attractive in those situations that it gets more and more highlighted when everything becomes unstable.
And another reason why we talk about that is also the companies we invest in, they have to get along with all this, like these terms and conditions that are provided from the government, and the government should more think in a way how we can make the environment to an environment that helps our businesses to thrive. And that is exactly the hope that has been put into the new Chancellor of Germany, Friedrich Merz, that he somehow will manage to get the country back on track by reducing paperwork, by reducing regulation, and help the companies to thrive within an environment, and by doing so provide jobs to their citizens.
Yeah, I mean, we live in a global world, and the companies where we're investing in, they're not just operating in Switzerland, right? Switzerland's a small country. They're operating in a world, and they have to navigate these challenges in all of these markets that they're serving. And so that's why these geopolitical tensions, the war in Ukraine with Russia, the geopolitical tensions in the Middle East, political tensions in Africa, political tensions in the US and in Asia, these all affect these countries. If you work from a place of stability, you can kind of try to find your way through it. But if you're trying to work through those instabilities and you have an unstable environment that you exist in, man, it's a much harder place to work from.
Yeah. And I mean, from there, we are going to the currency side, where the euro has weakened over the last 2-3 weeks. And the common sense is that it is mainly due to the situation in France, where it just causes so much insecurity that investors pull out of the euro to a certain extent and say, okay, let's see how it plays out, and then we can go back in. And then on the other side, we have the Swiss franc, which is strengthening more and more. I mean, against the US dollar, it stays more or less stable since July, but against the euro, it has gained another couple of percent. And it is worrying for like the Swiss National Bank for obvious reasons, and what we have discussed before, because Switzerland is so much of an exporting nation that a strong Swiss franc is hurting us.
To a certain extent, absolutely. And I think that's kind of the balance that Switzerland has had to play over the past, I'd say really strong over the past 2-3 decades. If you drop back 4, 5, 6 decades, the Swiss franc was a little bit weaker, but gaining ground, right? I mean, with the stability of the Swiss franc being the mandate for the Central Bank of Switzerland, the Swiss National Bank, they have to try to play that safe kind of line, right? Of we need this to be stable. Well, if things are volatile around them, how do you find that stability, right? And so then you focus on, not having high inflation, trying to keep the at-home market stable from their levers. And when everything is unstable, debt's increasing, it's going to strengthen, right? Even if you're not trying to strengthen your currency, you might even be actively trying to weaken it slightly. But because you're a stable position, people value stability. I mean, investors want stability at the markets. where you see the crazy movements is when there's instability, right?
Right.
When people don't know what the future is, when they're not sure, when they're unsure, and so that stability becomes more and more and more and more attractive. And I think that's what we've seen this year, not just with the Swiss franc, but what we've seen with gold and precious metals. We've seen it kind of, I'd say, over a year and a half, maybe a little bit more. We did recently see a pretty sharp drawback of gold, silver, and platinum, which maybe you can talk a little bit more about.
Yeah, I mean, the precious metals, gold in particular, they increased like crazy, especially this year. I think the performance is about 55% so far, and if you value gold as kind of currency as well, the devaluation of the US dollar becomes much more obvious,
Yeah.
I would say. And it was, even from our perspective, I mean, we are kind of gold bugs for a long time. The previous management already was. And it was crazy to see gold just going higher and higher. And we were very happy when we saw silver eventually, or finally, catching up with its previous all-time high of about $50, and platinum, which started to pick up in June from about $900 an ounce to up to $1,500, $1,600 an ounce. And then yesterday there was kind of a sell-off where gold lost about 6%, 7%, and it's like from top to low. Silver and platinum about 9%, close to 10%, which is the biggest drop within 1 day since 2013. But the question here really is that, like, what was that the top, and will it go back from here on, or is that just like taking a breath and then going further up?
Yeah.
And obviously we don't have any crystal ball which can tell us where it goes, but over the long term, for sure, we are very confident that it will go further up. And in the meantime, there could be some volatility, but for the reasons we have just discussed, with the geopolitical insecurity, with the inability to manage a government debt, and with like the unwillingness to keep interest rates at a good rate, or a rate that makes sense, there is not much that speaks for lower prices in precious metals.
Sure, yeah. I think that's a good point. I think even on top of that, as you kind of touched on if you look at gold or silver as a currency, or platinum as well as a currency against the US dollar, I mean, there's clear trends that the US dollar is going to continue to weaken. Today, tomorrow, that's not a prediction I'm willing to make, but over the long term, that's been its trend historically. And when you have your government and placing people who are going to be in charge of monetary and fiscal policy, and their stated goal is to weaken the US dollar to try to get manufacturing back, and grow assets. I mean, there's another case on top of, gold being kind of that protection against that, or at least having the ability to appreciate as an asset with a weakening dollar, right?
Yeah, and what is still a big case is the national reserves, where central banks all over the world are moving more and more towards gold. We have, or I have read numbers that China is the biggest gold producer, that the Chinese government holds about more than 5,000 tons of gold. And that's huge, putting that in respective to the about 205,000 tons that were mined so far, produced so far, like in world history, that are counted for.
Yeah. And I mean, I think having those considerations over time are always something to take into effect, right? I mean, we've been seeing the increase of central banks buying gold for now almost 2-3 years, roughly.
Yeah.
I mean, they'd been picking up before, but really just buying, and it seemed like buying at any price. I mean, and that's kind of the perspective of a central bank is, look, it's a long-term asset. Maybe not the perfect high, but maybe some of that gold sell-off was people just capturing gains, right?
Yeah.
And
I mean, there has been something else which brings us back to the government shutdown in the US. So the commodity, what is it called? Commodity trading
index.
Yeah, index, but like the institution that runs this this institution they are affected, so they couldn't bring out the report on futures that are traded on precious metals, which brought in more invisibility and more uncertainty when it comes to where or how investors are positioned in the area of precious metals.
Yeah, I think that's a really good point to bring up. I'm also absolutely blanking on the name of that organization. But yeah, I think that's again the whole political instability that can show an effect, right? If investors don't know what's going to come and they're used to getting information from someone, and now that information isn't there,
Correct.
How do I know how to move forward? It throws in a wrench into everything, all of my systems of how we manage, how we plan, how we act, and that is a big issue if it continues.
Right.
And I think we've covered a lot here.
Right.
And I would say, is there anything else that you have in your mind in terms of coming to the idea about this rumbling of another financial crisis, right? We have debt in Japan high, now a prime minister who's looking at wanting to increase spending, lower interest rates. The US, similar kind of action that wants to be taken. But the debt is growing and growing, and we're in the government shutdown because of a debt ceiling vote, right?
Right. I mean, when giving that we are trying to give an economic outlook, and that the rumors about another financial crisis is more imminent these days, and that it is more discussed. The question really is how likely is it? And there has been two bigger events in the US recently with Tricolor Holdings and First Brands Holdings, which both went out of business. They were both in the car industry, giving out loans and then packaging these loans, especially Tricolor Holdings, packaging these loans and sell it to banks. And with First Brands, they were selling their invoices and structuring their balance sheet and leveraging the balance sheet in a way that was just unsustainable. And the interesting thing here is that I read a lot of replies from so-called experts that say, yeah, something like 2008, a financial crisis that can't happen again because we have so many instruments to track everything. And as stronger they try to make an argument that it can't happen again, as more I have the feeling, okay, we're getting closer and closer, because they somehow feel the need to defend their industry, to defend also private markets, private debt, which has big issues. And I don't say that the markets are going to crash and that there is a financial crisis that will start tomorrow, but I'm certainly would make the point that you should be much more cautious when going into the markets, when buying investments, and really make sure that you diversify not only within different industries, but also different geographical reaches.
Urs, thank you so much. Really appreciated having you on. Look forward to the next time.